So let's talk about the notion that you're the CEO of a company that is got to make a lot of money for shareholders. And at the same time, you care passionately about the environment. You're doing some things like you're building a cracker, and you can explain that. In Alberta, my first reaction is, no, wait a second. You're building some big plant in some place that is, who the hell knows, is probably going to cost a fortune, and how can it possibly be good for the environment? And yet that's precisely what you're doing. So can you explain that dual mandate of making money for shareholders, but really trying to preserve the environment?
Yeah, we work in a very big scale in the products that we make. And so when we make an investment, sometimes it's more than $1 billion investment. And investors want to know that their dividend is safe. They want to know that your balance sheet is good and that you're going to be able to not only just decarbonize your footprint, but you're going to be able to decarbonize and grow. We made the announcement in Alberta for two reasons. One was because of the policies that are there from both a price on carbon and the ability to capture carbon and sequester it. But secondly, it's based on technology investments and things that we can do. We have an existing cracker in Alberta, and what we do when we make ethylene is we crack ethane. You make ethylene, but you also make methane and hydrogen off the back end of the cracker. We will build a new cracker. We will take the back end products of methane and hydrogen off of both the existing cracker and the new cracker, put it through an autothermal reformer, and make clean hydrogen, and that clean hydrogen will fuel the whole complex. I will take the whole complex to zero Scope 1 and 2 emissions with this project. That's 20% of my ethylene and plastics footprint around the world, and it will more than triple the amount of product that I make there.
All right, so you're talking about circularity, sustainability, carbon capture, and at the same time, green hydrogen, which people must know is probably got the least footprint of anything on Earth, correct?
Yes, well, this is circular hydrogen is what we would call it. Green hydrogen is a little ways away and fairly expensive, but this is taking byproducts off the back end of the crackers and converting them through autothermal reforming into hydrogen. So it's actually less expensive than even blue hydrogen. And by doing that, we know that we can generate a return on invested capital greater than 15% with this investment, which for an investor is exactly what they're looking for. How can you give me a return? How can you keep my dividend whole? How can you grow your enterprise and keep a value-creating multiple on the company? At the same time, we reduce the tail risk on the company and we move ourselves to green. Over the last 18 months during COVID, we went through 12 sites globally. That is our CO2 footprint. And we laid out a plan between now and 2050 to methodically get those sites to zero Scope 1 and 2 emissions. And we earmarked $1 billion a year. Our depreciation and amortization is about 2.9. $1 billion a year will go to decarbonize and grow the core of the company.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.